Starbucks, which is really an amazing business, largely because it got to a price that was hard to earn the kind of excess returns we like to earn over time. Kevin Johnson's done an amazing job. The team's done an amazing job. It's really a great business. But the stock just recovered too quickly, too fast. And I think investors will do well with Starbucks. But for a very brief moment, another restaurant company that we followed very closely over a long period of time dropped dramatically in price for reasons we didn't understand. And we were able to swap Starbucks for Domino's Pizza. So,
okay. Well, that's been...
we didn't get as much as we would like, but we own a little under 6% of the company.
Okay. And that's been a standout in the pandemic, right? I mean, can you talk a little bit about what else you've liked about Domino's?
So one, obviously, we like the restaurant industry. Interestingly, we've never lost money in investing in a restaurant company. I think we've never not made a lot of money.
And just to remind people, you own Burger King's holding company and also Chipotle.
Yes. So it's a space and industry we know and we like. Domino's is a pure franchising company. And interestingly, they were really first and best in sort of technology and delivery. And they own their own delivery infrastructure. So they don't need to rely on the DoorDashes and Uber Eats of the world. And that is actually an important competitive advantage in a world where you want to deliver. You can deliver pizza for $7.99. It's hard to do that with a delivery service taking massive cut of the proceeds. So it's an extremely well-run company. They've done an incredible job on everything about the way they run their business, to the way they grow their business, and to the way they allocate capital in their business. So it's real standout. We've admired it for years, and it was always never cheap enough. And then for about 5 minutes, it got cheap. I don't know who sold or why, but we started buying around $330 a share, and then it very quickly moved up a lot. And
they've done a lot of interesting things with technology, even ahead of the pandemic, right? In terms of streamlining the process. And
yes, and it's actually a great, if you will, it's a great ESG story. If a lot of the franchisees today started out as drivers, so there's a real path to grow in the company and become a franchisee, in multiple units, and the returns to franchisees on stores are extremely high, and you can become a millionaire, a 10 millionaire, starting out as a driver for Domino's. So it's a very compelling story, and there's a big international growth opportunity which they've pursued, and there's still plenty of room to run both here and abroad. So,
and talking about those drivers who can grow in the company, I mean, getting workers is an increasing problem for restaurants. And can you speak a little bit about what you think about this debate about the unemployment benefits versus as a factor here or not? Like, what do you think needs to change or not?
Yeah, the surprise numbers that came out, I guess, last week are not due to any weakness in the economy. The economy is crushing it. Okay, businesses are, booming. I would say, think about hospitality. You can't get a reservation at a restaurant in New York anymore,
except 5:30 or 10, right?
Right, and that's with excess capacity now that the restaurants are open. I think we're almost fully open indoors, and plus all the outdoor space. So I think restaurants are going to have a boom year, and the result is that so there's huge demand for labor. I think there's the largest. I think yesterday there was a number, the largest gap between job listings and the people who need. I mean, the point is there are plenty of jobs. People haven't had to work, partially because of the stimulus. I think that has made it somewhat. I think when unemployment benefits step back and some of the stimulus wears off, there will be more of a supply of labor.
To Domino's, it sounds like you're just very happy to be a long investor there, and it's not like the contentious, guns blazing Bill Ackman we've seen in some situations in the past. And have you had an activist campaign?
I have no recollection of guns blazing in the past.
Well, we talked about ADP a few years ago. I mean,
there were no guns blazing other than the part of the CEO of the company.
So in terms of businesses you do have interest in, I have a question here from Wayne Anderman, who says, how does an investment idea percolate to the front of your mind? what does the decision-making process look like? And is it finalized by a consensus at Pershing Square, or you personally, or how does it work? Can you give us a little insight into that?
Domino's is a good example. I mean, so over the last 18 years, we've followed a meaningfully large number of companies, and we're looking for businesses, I call them simple, predictable, free cash flow generative, dominant, super durable growth companies. And we track them. And what happened in the case of Domino's is it's a business we followed over time. And then for whatever reason, the stock dropped significantly. A couple of members of the team kind of pulled out the file, dug in, got, updated our numbers, updated our model, looked into, thought about the change, perhaps the change in dynamics with, I think that the bear case on Domino's, I guess over the last couple of months, is that they were a beneficiary of COVID, and now no one's going to order pizza.
Well, they're going out to restaurants, they're not ordering pizza, right? As you said.
And I think and also that there's more competition, right? with delivery for any restaurant today, there's, you can order things other than pizza. And ultimately our view was actually a lot of negative during the COVID environment. There weren't, football games where you invited over 12 of your buddies and ordered in Domino's. It wasn't a lot of college campuses, in session ordering in Domino's. And, our view is, there will be continued growth in that business. But that was kind of an assessment we did. But typically it's in this case, a 2-member part of the team updated their kind of research on the company, presented to the rest of the team. We discussed the idea, and it was a consensus decision because we were all in favor of it. But, we like having a balance between, 2 people do a huge amount of the work. I'll read, 10Ks, conference call transcripts, get updated on the story, but won't talk to, let's say, industry experts. And then other members of the team who are not actually involved in doing work on the idea, but all of us have the same economic incentive. We all own an interest in the profits of the firm, and we're big investors in the funds that we manage.
So once the stock dropped, how long was it? Like, was it just a few days or a few weeks, or how quickly did you move at that point?
Pretty quickly. It took us probably 10 to 15 days to kind of, our approach is to put together a pretty detailed kind of PowerPoint presentation to the team. In this case, we didn't focus on dotting I's and crossing T's. It was just plain obvious that we should start buying. But about 10 days for us to update our work, I would say. And it wasn't fast enough because we did miss out on.
You missed a little, yeah.
Yeah.
So the market's been moving.